Hey guys, Idiot Investor back. I am going to try and close out my put position early for just $1. If I can get that done, then I'm going to try a new strategy because I found something I like, and I'll show it to you guys. So let's see if we can close this out. So we go to our option, and we need to go to the same expiration date, which is today. You'll see our $3 put has a -1 next to it, so we need to buy that same put. So let's see if we can get rid of this for $1, and let's see what happens. Oh, it went real fast. Okay, somebody was very willing to get rid of that. Perfect. All right. So you'll see that our buying power is now 336.94 because we bought out of that contract for $1. So let's take a look at a different play, because Workhorse is continuing to go up and it's holding above that 350 mark. We can continue to sell puts. Right now it's only looking about 8 cents for next week at today's price. Oh, it's at 9 now for the $3.5 put. But I want to try something different and show a new strategy. We're going to do something called a poor man's call. Covered call, I'm sorry. So let's go. I liked April 22nd. And if we go down, I need to change these to calls. Buy a call. You'll see that the $2.50 call is worth $1.48. It's down 20% today, and that, I really like that price. That means that we can sell calls against that $2.50 call. We just have to sell them for $1.50 more so that we can break even. I'll show you how that works right now. This is a poor man's covered call. So we're gonna buy 2 of these. So I got buy call 2, review. Let's do 1.49 just in case. And we just have to wait for this order to go through. There it goes. Perfect. Okay. So now let's take these 2 calls. And so you'll see we have +2 contracts. We just purchased 2 call contracts for April 22nd for $2.50. That means that we're basically betting that the price is going to go up or continue to go up. And what we're going to do with that now is we're going to sell calls against it. So we paid $1.49. You'll see our average cost on the left. So that means that we need to sell it for $1.50 strike price higher to break completely even, to not take a loss right now. So what would happen is if the price goes over that. So, okay, let me start from the beginning. If we take a look for March 11th, which is next Friday, you'll see the $4 call. That's $1.50 above the $2.5 call, which is what we just purchased for a date further out. So if next Friday the price goes above $4 and ends on Friday at above that $4 mark, what would happen is we'd automatically purchase 200 shares of Workhorse for $2.50 each, and then we would sell them for $4 each, covering that base cost. In the meantime, our profit will still be the premium from the $4 call. So we are now going to sell a call. We're going to choose the $4 strike price for next week. This is next Friday. We're going to choose 2 and try and sell them for 19 cents. Let's see how it goes. We might have to adjust that price, but let's give it a minute. All right, let's adjust it. Let's see, 0.18. Slow going today. Come on. It still says 1.8. I think it'll go through. So I'm going to wait on this, and then I will update you when this goes through and what price we got it for, I think. I don't want to sit here and have you guys wait the entire time. All right, so I'll get back to you as soon as this happens. Okay, guys, so the order just went through just a couple minutes later. It ended up going through for 17 cents a piece. I adjusted it, but I didn't want to sit there and leave you guys in limbo watching it. So the order is now through. And now I can go a little bit in depth about what's going on here. So we purchased 2 calls for $2.50. You'll see that right here on the bottom. Okay. Now what we did, that expiration date is April 22nd. And then for next week, March 11th, we sold 2 calls against it. And we got a credit of $17 2 times, so $34 in total. Okay. Now what's going to happen is if Workhorse goes above $4 by the end of next Friday on the 11th, we'll end up purchasing 200 shares for $2.50 each and selling them for $4 each. Okay. It's all automatic. You don't have to have the money in your account. So like we don't have $500 to cover the $2.50 call, because that would be $250 we would have to spend in order to purchase 100 shares twice, because I have 2 contracts there. But since it's automatic, it's already happening. There's already a buyer and there's already a seller. You don't need the actual funds. Robinhood will automatically, and other brokers, they will automatically purchase the 200 shares for $2.50, and it's going to automatically then sell them for $4 a piece. Okay, since that's $1.50 difference in price, that covers the cost that we spent in order to buy the 2 calls, because we spent $1.49 each. Okay, so we'd actually make $1 profit on that play alone. Plus, we just made $34. Okay, so if Workhorse goes above $4 by the end of next Friday, we'll make $35 in total, and we'll have all of our cash back. If it doesn't go above $4 by the end of next Friday, we still keep these $2.50 calls, and then we sell another call again. Kind of the same way that we were playing with the puts. We're just going the other way, and we're using a contract instead of a share collateral. All right, so thanks for watching, guys. Right now you'll see that we have $300 invested, but you'll see our buying power is up to $72 now and 92 cents, and we still spent $300 on Workhorse itself. So the account value is still going to reflect where we're sitting with our money invested, because we have 2 calls worth $18 each and 2 calls worth $1.47. So they're kind of working against each other right now. But you'll see this update, the price update, and fluctuate as time goes on. And once it happens, I'll show you guys the end result. Okay? But thanks for watching, and until the next update.